The views expressed by the speakers of CamaPlan podcasts are those of the speakers only and may not reflect those of Cama, its members, or employees. Cama does not guarantee the accuracy of information provided by these speakers. Professional advisors should be consulted before implementing any options presented. Cama absolutely does not endorse or recommend any individual or organization, including the speakers. Cama, its members, and employees do not accept liability for losses and/or damages arising from errors or omissions within, reliance upon, or any use of the information provided by the speakers. Individuals are strongly encouraged by Cama to conduct their own due diligence before making any investment choices. Cama does not act as, nor offer the services of, an investment advisor, CPA, realtor, or attorney. If tax, legal, accounting, investment, or other similar expert assistance is required, the services of a competent professional should be sought. Hello, everyone, and welcome back to The Road to Financial Freedom, a podcast that allows experts to share their stories and secrets to unlocking their financial independence. This podcast is brought to you by CamaPlan, a self-directed IRA administrator in Ambler, Pennsylvania that is focused on educating investors with different ways to grow their retirement savings faster through alternative investments. And we are continuing to record our podcast remotely. I'm Jess Jones, CamaPlan team member and your podcast host. And this week's guest has been an entrepreneur since 1998 and an active investor since 2005. His extensive background in business includes everything from insurance, banking, financial services, real estate, alternative assets, and digital marketing. In 2014, he started Infinity Asset Ventures LLC, a firm with a focus in distressed residential single-family homes. And last year, he joined longtime friend and colleague Jack Krupe as a principal in business development and marketing for JCAM Investments, a boutique alternative investment fund started by Krupe. JCAM and its diversified real estate fund has enabled investors to invest passively in opportunities across sponsors, geographies, and asset classes. By combining cash flow and upside through tax-advantaged investments, this leader, entrepreneur, and partner has assisted many investors with achieving the goal of being able to financially succeed in economic cycles. So wherever you may be listening, please give a warm welcome to William Bonati. William, thank you so much for being here today.
Yeah, absolutely, Jess. Thanks for having me.
Absolutely. Well, we're glad to have you. I'm excited to get started and discuss everything, starting from, the very beginning. So if you can tell us some more about your background, where you were born and grew up, went to school, what you studied, all of those things that may have surprisingly come up later in life that you didn't even think would.
Yeah, of course. Sure. So I grew up in Fort Collins, Colorado. My family's been in Colorado for over 100 years, so it's pretty cool to be here. And I went to Colorado State University, got a degree in finance and real estate. And then directly after college, I got the Series 7, 66 Life and Health. Sort of started my career in insurance and banking and was, in that area for about 6 years.
So that's really interesting. Is there anything, in terms of insurance stuff? That all kind of, I blindly just have car insurance. I have, I'm still living with my mom, so I don't think about homeowners insurance, things like that. What are some of the early things you picked up about insurance that may have influenced the way you think about investments now and have kind of helped others start to think about investments now?
Yeah, Jess, that's a great question. So being pretty green out of college and really just looking for any opportunities to expand my experience and knowledge base, and with the idea that, I wanted to be a financial advisor, I wanted to be in that sort of space because I thought that it could provide a great financial outlook for me, and then also the ability to sort of help people achieve their financial goals. And one of the opportunities right out of college was to work for an insurance company that was AXA Equitable. And ultimately I found out that it wasn't really the best fit for me. The products that they sort of pushed to their clients were primarily like variable life insurance, which is a really complicated product, and so it's a life insurance. It has a life insurance aspect to it, but really affluent people, or their pitch, this insurance company or insurance companies pitch to people, well, you can save tax deferred through these products, and you can be invested in equities through this. So what I ultimately found is that, from a cost perspective, variable life insurance just doesn't make a whole lot of sense, but it was a learning experience for sure.
Definitely. And for you, I think it's important to stress the fact that a lot of people listening may be starting out and be that green person coming right out of college or things like that. But important to stress the fact that you had a moment where you were like, I don't really necessarily enjoy this, even if, it did seem initially like this would be a great financial opportunity. It's not something I necessarily enjoy. So you were able to start looking elsewhere. For you, how did you then take that turn to single family real estate investing? Was that right away, or did you experience other things for that?
That was a longer process, right? So from insurance, I was like, well, I don't necessarily believe in this product, so I'm going to transition into being an advisor and offering, mutual funds, wrap accounts, all that kind of stuff that, traditional type of investment products. And then I did that for better part of like 5 years. And towards the end of it, it was like, this isn't like, it was continually like fighting this isn't the right fit for me. I'm not having fun. I don't enjoy this. I don't necessarily believe in the products. I don't think that they're really ultimately helping people. And it's just like this negative feedback loop that I couldn't imagine myself being in for very much longer. So fortunately, I had a very supportive spouse that was like, hey, make the change, do whatever you want. And so I think it was 2013 that, we was just at a friend's house, and I was introduced to my friend's mutual friend who said that he had bought a bunch of single-family homes in South Florida. This was, 2013, so the, home prices were still very low, post-2008 recession. So you could buy a single-family home, like a 3-bedroom, 1-bath, or a 3-bedroom, 2-bath for like between $75,000 and $100,000. It's crazy.
Wow.
And the
rental, it's a little different.
And the rental rates were, $1,200 to $1,500. So he bought a bunch of properties like that, renovated them, to the extent that they needed to be, and built out a portfolio of single family rentals. And this guy was like my age. Like, my impression was that he wasn't any smarter or more motivated than me. And I was like, man, if this guy can do it, like, why can't I? So
I can relate to that phenomenon of like, if they can, I can definitely do this.
Right. If this guy can do it, like, right? Okay,
it's
maybe
like a nice competitive bar setting for yourself. Yeah,
right, for sure. So with that sort of as a spark of like, oh, maybe I should take a closer look at this real estate thing, and so I sort of just like dug in and started doing a bunch of research. I got on BiggerPockets and looked at all the different type of real estate investing that you could do, the pros and cons of each, and then talked to a bunch of friends that were, investing in real estate. At the time, it wasn't a lot, but, I reached out to those the connections that I had on LinkedIn and just asked if I could, pick their brain or talk to them for a little bit about what they're doing. And found, a friend who was wholesaling, and that seemed like a really great fit at the time because, you don't necessarily need any capital to do it. You're just getting properties under contract and then selling the contract to an end buyer. So I decided on, well, that's what I'm going to do because I didn't have the assets at the time to be investing in real estate. So, but I had the time and motivation to do it. So, so the next step really was to just like figure that out or do all the research to prepare myself to jump into that. And so I seeked out, the top producers or top wholesalers and found a mentor and, got to work.
That's awesome. I think you're laying out a number of really great tools that people have, especially if they're new and think, well, what do I have at their disposal? The fact that you can reach out to the people you are connected to on LinkedIn and get those informational interviews in. You can do your research. You can meet somebody and think, okay, well, if he can do that, I have an interest in that, I can do that too. Like, I think you're just laying out a lot of things that people, I mean, I think of myself, I come from that theater background. That used to be my motivator for, like, if I was having audition anxiety or things like that. That idea of, like, well, if they could get through it, I can do it too. I think that, I don't know, it kind of fosters a very much that go-getter competitive spirit that a lot of entrepreneurs do have to have in order to be successful in their field. So I think you're laying out a number of really great roadmap points that people can definitely take away from that response. Thanks for sharing it.
Yeah, of course.
So for you then, I mean, you mentioned your spouse, who seems like she has been an incredible support system even from early on. Were there any other people within your life or any other influences within your life, whether it was parents growing up? I mean, I'm always interested when people say, I went to school right away for real estate, or this was something I was always interested in. Like, what was that bug, basically? For you, what were the major influences that inspired you to think, I want to become an entrepreneur?
Yeah, no, great question. Probably, obviously my parents and the way that they sort of raised me. I mean, we were, upper middle class, and my parents always made me work for everything that I got, right? So, going back to when I was like 10, 11, 12, like I was obsessed with motorcycles and dirt bikes. And, they're expensive, right? So,
right.
And my parents weren't just going to be like, hey, here's a $3,000 dirt bike, so.
Yeah,
like
exactly.
I guess the point is this: I grew up having to work for everything. So I would be raking leaves, mowing lawns. My mom owned a hair salon, so I would wash all the towels and get paid like $1 a load of laundry. Like, just doing like everything that I could to earn and save money so that I could buy, the things that I wanted. And I think that kind of stuck with me, to kind of just, do what needs to be done to get the things I want or have the lifestyle that I want. I mean, it's more about lifestyle now for me than money, but probably my parents has probably been the biggest influence.
Yeah, that's awesome. I mean, I think just based on your previous response and then how you just answered that question, I think there is definitely a connection between that work ethic has always had to be there, and then how it's played out in how you decided, okay, well, I didn't want to be a financial advisor anymore. What was my next step? What could I do next? And you were able to do the work to pursue that. I think that's half the battle right there is, do you want to do the work, and do you do the work? So I think that's a really great response to all of that. Thanks for sharing everything.
Sure. Yeah, like one of the catalysts for me to change, from being an employee to an entrepreneur was, I was just everyone that I saw that was really successful financially and creating the lifestyle that they wanted for themselves or their family, it was all entrepreneurs. Like, I didn't know that many people. I mean, granted, you can be very successful as a professional that's working for a company. Like, you can absolutely do that. But for me, like having the structure of working for somebody, having them determine which vacation days I can take, and having to get approval for that, and like it didn't fit for me.
Yeah.
So that was the biggest motivator.
Yeah, and sometimes it's like one of the best ones too, because you pointed out something great where it's like, now for you it's more about lifestyle over money. And there was probably a point in your life, and definitely correct me if I'm wrong here, where it felt like it couldn't be lifestyle over money for you. So I feel like being able to understand that it's something that you never wanted and being able to work toward it is incredible, because then you're able to, you can't unlock something unless you try to find the key to do it, basically. Yeah,
and certainly early on there wasn't a lot of money. It was like, I gotta pay rent, this month.
Right.
So like I was financially trapped in a W-2 or working for somebody else. So once I had put myself in a position to be able to have the opportunity to take the risk and, have 6 months to make it happen, I went for it.
Yeah, absolutely. So for you then, what was, in that 6 months, is that when Infinity Asset Ventures was created after that, or was that more of a long process?
Yeah, so Infinity Asset Ventures came, I believe, about 1.5 years or 2 years after I first started investing in real estate. So I transitioned from banking investments. I believe it was 2013. Started wholesaling in 2014, late 2013, and then Infinity Asset came about in 2014.
Interesting. And then, so how has JCAM Investments differed? I want to talk some more about that company. What do you guys do, and how is teaming up as a principal there in business development differed from what you were doing at Infinity Asset Ventures?
Yeah, good question. So speaking to JCAM first, JCAM invests in funds, or the funds into the capital that comes into the fund. We invest into multifamily syndications, ground up senior housing, and some non-performing loans and reperforming loans. The way that it has differed is that Jack and I have built it to be structured really sound and compliant from the start. So with the Reg D 506 offering strategic fund servicing for the financials, accounting, and reporting. We use Syndication Pro as a platform for our investors, like a login to where they can go and look at the dashboard, look at all the PPM documents, subscription agreements. They get their tax documents there. They can see details on the projects that we have in the fund. And how that really differs from Infinity Asset Ventures, or when I first started, was that I was doing most of the stuff just with joint venture deals. It wasn't like there was no fund. It was just, here's a great opportunity. Are you interested? You want to partner up with me on this? I'll do all the work. You supply the money, I'll do all the work.
Yeah, the operational. Yeah, definitely. It sounds like the operational background that you were able to contribute to what JCAM is able to provide people in terms of initial information is, like you said, extremely sound. So then what was the difference? Was there any learning curve for you going from all single family housing investments to distressed single family homes to then multifamily syndications? Was it, where were the differences, and how did you have to find yourself readjusting in terms of, well, this is a new thing I have to learn now in order to create that sound system that people are able to know from the ground up is compliant?
Yeah, so I guess probably the biggest difference is the underwriting is pretty similar. I mean, you look at the financials of the deal, you look at the market. If that makes sense, then great. And then you also, we're underwriting the operator or the sponsor who's actually running the project or executing on the strategy. So that's a little bit different in that, previously, I was the operator. I was the one charged with sourcing single-family homes, charged with hiring contractors to do the renovations, basically like the project manager, so to speak, of the whole deal and the operations and execution. JCAM differs from that in that we are co-investing into other operators' projects and deals. So probably the biggest differentiator is the amount of work beyond the initial due diligence underwriting to make sure that it is in fact a good project and set up for execution. Once that's done, then it's a lot less time that we are spending sort of doing the tenants and toilets kind of stuff. So
yeah,
does that answer your question?
It does, yeah. I think you really did answer that, in that, I mean, obviously the single versus multi speaks for itself, but then the fact of, for you, it actually comes down to you're actually able to focus on creating a compliant, sound, as you said, operational system that people can then invest with, versus, you're the one on your hands and knees doing all the work and the tenants and toilets thing, like you were saying. So I think it does answer the question for sure, in that it kind of lays out just how different, how different business can be for one person, even, within a few years. So
yeah,
I think it does answer the question. For you then, who is a typical client that you encounter at JCAM, and how are they benefiting from these opportunities, the off-market investment opportunities that you guys provide? And then, do any of these people work with self-directed IRAs? Because we're a IRA custodian, so we see a number of people who invest in multifamily syndications, things like that. Do you have to do anything different for clients like that, or is it pretty run-of-the-mill?
Right. So there's a lot there.
So
couple
much.
Points. So
Multi-part question.
So starting first with, you lose me after one or two. So sorry if I don't get all of them answered
you're
here.
Good.
The typical clients that would want to participate in our fund are busy professionals who know enough about the opportunities in real estate that they want to invest or participate, but don't have the time to do it. It's extraordinarily time consuming. I think anyone who has a couple rental properties or many rental properties, or is investing in multiple real estate syndications, know that putting that all together and managing it is really time consuming. So JCAM is a great fit in that we can provide and source the best opportunities and make an easy way to invest passively, but also help with diversification. So one of the problems that we saw, or that we see with real estate investing, is it's difficult to achieve diversification,
right?
Because of the capital requirements. So specific to multifamily syndications, most capital requirements the minimums are typically $50,000. So, if you're, that person that has $1 million and plenty of time to underwrite, do due diligence, find and source all the deals, like, sure, great, hats off to you, like, well done. That's not most people though, right? Most people maybe have $50, $100, $200, $300, maybe $500,000, but don't have the time or network to find, source good opportunities, and then also be diversified among those opportunities. And geos, right? So most people generally invest in the community that they live in because they know it really well. But that's not that great a diversification. So the point of the fund is really to provide a passive way, low capital requirements, to be invested in real estate, in diversified asset classes, so multifamily, senior housing, and non-performing loans, and geographies.
Yeah, I think you hit the nail on the head when you were kind of stating that diversification has a number of different definitions, especially in this field. I think it can look geographically diversified, a portfolio, or asset-wise diversified, but if you don't have the means to do that, like you're saying, with a certain amount of capital that's required to get involved in real estate investing, you don't necessarily have the money to go and pick up some gold on your way out. You can certainly, an opportunity like this gives people the chance to diversify within, one specific place that their capital is going toward diversifying their portfolio. I think that's an excellent purpose that JCAM sets out to provide to its clients, and I do enjoy the fact that you're providing people with the opportunity to get involved without having to spend all the time economy required to do it.
Yeah, it's turnkey.
Yeah, For sure. So for then, the other part of my very long-winded previous question was, do you work with anybody who invests with you guys that invests with a self-directed IRA? And does that look any different than a typical investor? Do you guys have to do operational-wise? Is there any other steps that have to get taken with anyone who's using retirement funds to invest?
Yeah, no additional steps really. I mean, if they have a great custodian like Cama, then you guys make it pretty simple. I would say that most of our self-directed investors participate in our fixed share class, which is a 10%, just pays a fixed rate of return. Because our equity share classes, they're set up to where there's a profit split, and there's some UBIT issues that come up in self-directed IRAs, which I won't get into the weeds into, but yeah, our fixed share class is really the best fit for those types of investors.
Gotcha. And you also raise a great point too, the fact that just like anybody would need to go onto JCAM's website, learn about the assets you're offering, the investment opportunities, what they can get involved in with their capital, people can do that same research for figuring out what custodian is best for them, because we're very hands-off. We're pretty much like third party. We handle your paperwork, your administrative work. We're not going to tell you what to do. It's self-directed, but you can determine what self-directed custodian is best for you if you do that research too. Kind of like it goes back to your original thing too. You do the work. You have that self-motivation to do it.
Yeah.
Exactly. So for you, like about now at this point, you've gone from being a leader to a partner, and I'm sure in some ways a mentor to people who are probably new to this and seeing you and want to get to that level as well. What discoveries for yourself have you been able to pick up as a leader, a partner? What's surprised you along your journey personally, emotionally, those sorts of things?
Yeah, the journey, right?
Yeah.
Well, like with anything in life, if you don't truly believe in the product or the process, it's really hard to participate in and be fulfilled. So I've found that I've always gravitated, in this case, towards real estate, because it's something that I believe in, and makes me, want to get out of bed early every day and get out and do it. And so that's probably been like the biggest, I guess, lesson. Well, one of the many lessons that I've picked up since graduating from college. I thought I had a pretty good idea on what I wanted to do, but that evolves over time.
Yeah, definitely. Yeah, I think that's a great point. Accepting the fact that it will evolve is, I think, a very hard thing, especially if you're coming right out of college and you're like, I spent this amount of money on this degree. I have to do exactly that, or else what was this all about? That's definitely the wrong mindset to go into life with post-grad. And I think it could definitely trip a number of people up. Not so much an entrepreneur who has a different mindset and is accepting change, accepting evolution. Definitely more set up for success, I think, than someone who's like, well, I majored in finance, so I'm only going to do finance the rest of my life.
Yeah, I guess, like to say more things about that, I think, when you're, in your early to mid and even late 20s or, 30s now, like, you can be really flexible and you can try new things and you can, who cares, right? I mean,
it's such a simple truth.
There's a lot less risk, when you're young and not married and have kids and responsibilities and, all the stuff that goes along with that. Like it's a lot easier to make a change. And then if you don't like the change, then you change again. And then, until you find something that you want to do for a while. And then maybe you don't want to do that anymore, so you change again.
Yeah. Exactly.
It's like, what's the big deal? Like, I think that was hard for me to, as a younger person, to sort of recognize that it's okay to do that, and it's not sort of looked down upon that I'm, not doing something professional, that I'm, moving around or changing and doing stuff. So that was a big realization, or a big, thing that I learned.
Yeah, it's definitely a series of mini epiphanies I've had like that over the course of the last few years, especially since I've graduated. I worked right in a theater, and I did not have fun the first year out of college, and I was like, well, what did I just go to school for 4 years to do? And now I'm interviewing people for a living, and it's really interesting. So in the way that all ties together, and I'm like, I like this a lot. What else can I do? And all these different things. And I'm like, that's not a bad thing. I need to stop myself from getting upset about that. But, it's like, it's not a bad thing to be like, what's next? What do I do now?
For sure. And look, like college, like I, personally, like it didn't prepare me at all for life,
No, same.
So, I think college is really important and great for, a foundation of education and structure and how to achieve goals and do all that kind of stuff. But you don't really learn any life skills. Well, I shouldn't say you don't learn any life skills. You learn the life skills that I just told you about.
You learn life skills in a bubble within.
But like, if there's any advice that I would give to like someone like coming out of college, it would just be to like get experience and try a bunch of stuff, and don't feel like you have to be, stuck in the major, that you chose in college because that's what you spent a bunch of money on. Well, you spent money on education and, that foundation, but that doesn't necessarily determine what you're going to have to do in the future. So,
yeah, I think you nailed it by that simple, perfect statement of like, who cares? Chances are the person next to you, the person that you're like, well, I can do that too, they're also going through their own quote unquote existential crisis. So it's like everybody goes through it. It's a normal thing. It's like, and that's something I've definitely had to come to terms with myself. So I think people listening to this can probably hear that and maybe finally let go of that exhalation that they've been dying to kind of let go of. So thanks for sharing that, William.
Yeah, of course.
For you, now at this point, one of the big things is you partnered in 2014 with Jack. So last year, you partnered with Jack. So what are some of the major characteristics or complementary traits that you found that you and Jack have, or even in team members, employees, anybody that you work with, that what drew you guys together? And what do you then think for you as an ideal partner? What complementary traits do you think people should look out for, basically?
Yeah, great question. So I've known Jack since 2014, and I met him at a real estate event. I was building out my portfolio of non-performing loans, and at the time he was in New York and had a big fund that he basically started. And what drew me to him was, he was, really successful for where, like his trajectory was almost like unthinkable, right? So, so I was drawn to him just based on his success, and he, his integrity. He's a great communicator, great listener, and he's a doer. And then he's a great connector and really good with high-level strategy. So, like, those were like all the things that sort of drew me to him. And then I ended up joining his fund. I believe it was in 2016. And so, we've kind of been working together since then. I am really good at implementation, process, and execution. I'm sort of OCD about a lot of that stuff. So we complement each other, and that he's a big picture innovator, sort of big ideas man, and then I make it happen or execute. And so like just like basic stuff that like you look for with partners and employees, like just do what you say you're going to do. It's pretty simple, really.
Yeah, no, I think is interesting that, you describe Jack as a doer, but based on what you've told me too, I would consider you a doer as well. And that harmony of how you do things differently, but complement each other together, makes a ton of sense for the way you both work, the way you work together, but then the way you seek out others who are going to work with you. So I think that it's a really, as simple as it is, it's very true. I think that's a really great thing to kind of look out for, and people who especially maybe paralyzed by that fear, that same thing we were just talking about, that idea of, well, if it's not business marketing like I studied for 4 years, what the heck am I going to do?
Right.
You just do it.
Yeah,
Nike had it right.
One of the keys for me, sort of on this journey in real estate, has always been finding the top people in whatever strategy, right? So when it was wholesaling, I looked for one of the best wholesalers that they could find. When it was rehabs, I was looking for the best rehabber. And then non-performing loans, I was looking for who is really succeeding at this, and Jack was that person at the time. And not trying to reinvent the wheel, sort of just learning what their process was. And then that gave me some sort of structure or assurance that if I do X, Y, and Z, I'll be successful, or be better off than trying to figure it out on my own. Because they've done X, Y, and Z, and that was their result. So, let's not overcomplicate things here. That's been my process. I think that could be helpful for people that are, have sort of reservations or fears about, taking the next step or doing anything. It's just seek out those who are doing it well and try to copy it.
Yeah, no, I think that the idea of innovation doesn't always have to be let's reinvent the wheel, and how do we change something and take it as giant risk without looking and acknowledging the fact that there is a formula that, to an extent, for others in different variations has worked, is definitely, I think, a hubris thing that probably some people just can't get over, but it's something that a lot of people should really consider when starting out here. And I think that you raise really excellent points here.
Yeah, look, and I'm not saying completely plagiarize the process, but learn the process,
but something's working,
and make it your own, right?
Yes. Yeah, definitely. I think that based on what you describe of what JCAM is, it sounds different than other multifamily syndications I've talked about. It sounds like you're going to draw investors who are interested in the same types of these off-market investment opportunities, the same, or people that see Jack and think this is somebody that I align myself with, because everybody's going to be different. So I think that you hit the nail on the head. It's reinventing the wheel is not necessarily I'm going to do exactly what this person did and then I'm going to be successful too. It's I'm going to look at what this person did. I'm going to see how I can adjust it to make myself successful. I think that's a great way to look at it.
So what we've kind of done with JCAM is, the point is to solve some of the problems that Jack was experiencing investing in multifamily syndications. He started investing in multifamily, I believe, is 2016, primarily because he couldn't invest in non-performing loans because of the conflict with the fund at the time. Mm-hmm. So, and there were some problems that came up. He only had enough capital to really be in 4 or 5 deals at a time, and if there's a bump in the road on one of those, that kind of throws the return on investment off on your whole portfolio there. So we just kind of we're oh, these are the problems that multifamily investors face. Let's figure out a way to solve those issues. And I think we've done a really good job of that with the JCAM Fund. So.
Yeah, that's awesome. I think that's a really incredible approach to take too for you guys. Then how do you how do you personally too, what's something that you use to kind of keep up with that knowledge, or decide, okay, well, the market's changing here, or this new law is happening, or a pandemic comes up? Like, what do you use to keep up with your knowledge of investing, and how the investment world is changed by the world at large?
Yeah. So, just being active in the industry, obviously, staying like super connected there, constantly listening, reading, learning from podcasts, listening to webinars. I mean, the amount of free content available now is unreal.
That's so true. Yeah.
I think you can be an expert at just about anything by watching YouTube. So,
Yeah, I would have never thought I would be like a pro chef, and here we are.
Right.
I make an incredible chicken piccata now, thanks to YouTube.
Nice.
So I
love a
completely
chicken
agree.
piccata.
See that? There you go. I'll have to get some over to Colorado at some point. But it's I think it's definitely, you raise a great point there, that it information is very much at people's disposal, and knowing where to find it, knowing what to seek out is half the battle. But literally just Googling something as simple as best wholesaler or this, and like, you can find things and determine what works best for you and who you want to seek out, what you want to seek out. So I think that's a great piece of advice.
I mean, early on, Bigger Pockets for me was, when I literally knew nothing about real estate investing, that was an unbelievable resource. But yeah, I mean, the amount of stuff that's available for free now is pretty unreal. So
totally, yeah, I agree with you. For you, is there anything this past year or recently that you've read or watched or found particularly interesting, even if it didn't directly relate to your work, that surprised you or that changed your way of thinking at all recently? Because I like to ask this question because it's always interesting to see what people have been reading, but also what they were able to kind of get from it and how it's affected their worldview, especially in finance and investments.
Yeah, so pretty early on, I was reading probably a book a week related to business and real estate. And, I've been super busy recently, but I did decide to crack open one of my favorites from way back, which was The One Thing by Gary Keller. And that really helped me sort of like refocus and narrow, the priorities and just focus on one thing, right? So, chip away at that first domino. Because once that first one falls, then everything else sort of like falls in place, and you get that momentum going. So that's been recently, and then I also watched The Greatest Showman with my daughter. Last week. She's obsessed with musical theater. I think influenced by my wife. She's a big musical theater lover, but like beyond the music being great, and I love the idea that sort of like a man's station is only limited by his imagination. Yeah. So
no, I think
like
that
cheesy,
I love that response.
But
No, I like that response a lot. I think you're probably one of the first people who's ever given me like a television show or movie that I actually know. So thank you.
Musical theater. Thought you'd appreciate that.
The power of dreams is not something that's limited to one industry. You know what I mean? Like, being a dreamer in musical theater is just as much of a, you do the work to make it happen as it is in real estate. So I think that that's a really great connection that you're able to make.
Yeah.
Definitely. So for you guys then at JCAM, the goal for your investors is succeed in economic cycles. Can you explain how that goal was developed, and then how you've seen it kind of play out, if in any way that's surprised you or kind of given you that sense of reassurance that, what we're doing is working? Yeah, for sure. So I kind of touched on this a minute ago, that the JCAM Fund was really born out of Jack's experience investing in real estate syndications.
And then he's been investing in real estate really for the last 20 years. And through those experiences, the purpose or strategy of this fund was to allocate into asset classes that are stable or more stable through booms and busts, and then most recently, as we've seen, a pandemic. So one of the interesting things that we've seen with our multifamily projects is that the occupancy rates have stayed above 95%. Collection rates are above 95% when the national average on collection rates is around 76%. So it's kind of been and then also with our senior housing projects, the pandemic has been a real litmus test, and they've performed really well, and it's kind of playing out as we thought it would. I mean, we invest in multifamily Class B, so that's like working class. Typical unit ranges from $1,000 to $1,500 a month in rent. It's 1 bedroom, 2 bedrooms, and they're in like secondary markets, so not metro areas, but like outside of Atlanta, Augusta, Jacksonville, places like that. And the demand for those types of housing has gone through the roof because of this massive exodus out of metro areas. And then also just like the Class B is right in the middle. So you've got Class A, which is like luxury apartments, typically the highest rental rate in the area. And then you have Class C, which is lower income housing, typically, government subsidized in most cases. So being in Class B, like through economic booms, good times, people are moving out of Class C into Class B, and out of Class B into Class A. And then conversely, in tough times, people are moving out of Class A into Class B, and out of Class B into Class C. So the Class B being right in the middle, there's always strong demand. So the theory is really proven out. This is nothing new. Multifamily Class B has been a really strong asset class for decades. So I guess probably the biggest surprise for us was just how well they've been performing through the pandemic.
Yeah, and I think it's a great goal to kind of explicitly express to people, to being able to exceed in economic cycles, because I think when people sign on to a fund or sign on to someone's business or this and that, I think the idea is, I believe in for better or for worse, basically. It's kind of like a business marriage. And to be able to kind of express that off the bat to people, I think is a really powerful thing, to not only say, hey, we're confident in what we've created, but we're confident that you'll succeed with us. And I don't know, I just think it's a really fabulous goal to be able to share with investors, and it's not something that's hidden behind the curtain like Wizard of Oz style or this and that.
Exactly.
I think it's great. It definitely speaks to the goals that you guys have from the top down, and what you're able to express to your investors is really clear, and that goal has always been clear because that exists. So I think that's great. How do you guys then vet your investments? For you, is there anything, even when looking back, I know you said like you did a ton of research on every stage or every step of your process. There was always a certain amount of research involved with you. How have you kind of developed that process for due diligence or vetting investments over the course of your investor lifetime? And what is some of if you could kind of like, what have you developed? And then if you could share anything, because understanding everybody's different, that you think newer investors, younger investors can really take away from how to start to ask those questions on how to conduct their proper due diligence?
Right, yeah. So you always kind of want to know how it's going to go sideways. So, like just like the basic underwriting and the financials, like do those look good? Does the market look good? Like does the geography look good? I think it's a little unique in how we're doing it now for JCAM versus how I was doing it as an individual investor or investing in individual like single family homes or wholesaling properties. Like when I was doing that, it was, okay, well, let's do a desk review, like look at, Zillow, Realtor.com, NAR, RPR, get the desk value, and then I would go out and actually look at the property to determine what the actual value was versus what the after repair value was, and then I'd work in my wholesaling spread and, like really understanding the numbers of it. And then, so that differs a little bit now in that, like, we're not, we're investing in projects that operators or sponsors generally are bringing to us. So they're the operator, right? They're out, boots on the ground. They're looking at 200 to 300 buildings a year and bidding on, probably 20 to 30, and then actually only winning or getting properties under contract, maybe like 5 or 6 properties a year. So those 5 or 6 properties or opportunities that they bring to us, they've already done a pretty significant amount of work and due diligence already on it, right? So we look at that, and if that makes sense, then we have a pretty lengthy conversation with the operator on how that could go sideways, and then it's a lot of it's relational and track record. So the operators or sponsors that we generally invest with, have at least 10, 15, 20 years of experience. This is like their 50th project that they're doing. These aren't like new to the street type of operators.
So, that would be a longer how can this go sideways conversation. Right. Yeah. Much longer.
So it's a lot different from what I do when I first started out to what we're doing now. I hope I gave you some color to that.
Definitely. I definitely think so, because I think you touch on the fact that, there is, just like anything else, due diligence is definitely a journey. The fact that, when you were starting out, you were doing so much of this on your own. You were getting onto Zillow and having to look things up. And now you have the ability to work with people who are in the operational side, or operators that are further along their journey. Not to say that they didn't start out at some point like that brand new person off the streets who would, who could come in, but they were at one point. I think that that's something that a lot of people probably don't always remember, or maybe take for granted, the fact that there are so many people within this network who are further along, but also have that experience under their belt. And being further along doesn't necessarily mean they wouldn't work with you. It's more just like they've got experience, and you need experience, and it's a good marriage and a good harmony. And I think I think you definitely touched on the fact that it's always going to go in stages like anything else.
Yeah.
Thank you so much for sharing that, and kind of for being so candid and open with so many of these things, William. I really do appreciate it. I think it's always a great conversation when you can dig into yourself and your business and share this on this podcast. So as we wind down toward the end of the interview here, one of the questions that we do ask everyone is, what would you say are your keys to building wealth and unlocking your financial freedom? So these things don't have to be financial, especially for someone like you, who you said lifestyle has won out over financial for you at this stage in your life. But what's something that has informed the unique way that you look at success, and what's brought you to that point where you now say that on a podcast or anywhere else, basically?
Sure, of course. So, this goes back to, the catalyst to my transition from working for somebody to being a business owner or an entrepreneur. It was all about, how do I build something that I own that's going to allow me to have more time for myself and for my family. And that's kind of the way that I measure my success is, how much time do I get to spend doing things that I enjoy doing, and spending time with my family versus, having to go produce something every day.
Right. Yeah, exactly.
So that's probably the biggest thing for me was, realizing, or, for me that wasn't going to happen, working for somebody else. So,
right.
Started accumulating assets that pay me or give me cash flow every month. So when I get up out of bed on the first of the month, I'm not, thinking about all the things that I got to do to make money by the end of the month. It's like, well, I know that I have this amount of cash flow coming from, my loan portfolio, residential properties that I may have, and other stuff. So
awesome. Well, thank you. This has, I think, been a really I don't want to say like this has been a pleasant conversation, because it's been more than that. It's been like, I think, really helpful to hear from someone established like yourself. I think of me and all the insecurities I have that surround me and money, and I think you've really done such an incredible job at making me feel like there's less to be worried about. So I can't wait to share that with our listeners.
Yeah. Who cares?
Thank you for
Just
sharing.
go do
right?
it.
Who cares? Thanks for sharing this, and thank you for sharing your story, all these lessons you were able to learn along the way. I think you are going to really help a lot of people like myself clear up some of the mystifications or misconceptions that they have about the economic cycles that may hold them back or won't hold them back, because who cares? So for anybody who's listening to this that want to get in touch with you directly, if they have more questions or want to learn more about JCAM, how can people reach you? Do you have any social medias, website, email that people can use to get in touch with you?
Yeah, of course. So our website is jcaminvestments.com. We've got a ton of content on there. We try to do webinars twice a week, or not twice a week, but twice a month. And then you can follow us on Facebook. I'm on LinkedIn as well. And we are putting up a YouTube channel to have all the same content that we have on our website there as well. So that'll be out shortly.
Awesome. Well, thank you so much again, William. And thank you, everybody who is listening. Be sure to be on the lookout for more events featuring William Bonati and JCAM Investments. But until then, everyone, thank you for joining us this week on the road to financial freedom. Be sure to tune in to hear more from our experts, our Call CamaPlan today, how you can learn how to start to take control of your future wealth. Thanks, everyone. Thank you, William.
Of course, Jess. Thanks for having me.
Of course. Thank you for being here. Have a good rest of your day, everyone. Thank you all for tuning into our podcast. We truly hope that you're enjoying your ride along the road to financial freedom so far. If you like what you've heard and learned, or if you want to hear more about certain topics that we may have already covered or have yet to cover, please subscribe, rate, and leave us a review. We would love to hear any feedback from you so that we may continue to make our podcast the best that it can be for you, our listeners. Thanks again, everyone, and remember, tune in next week to The Road to Financial Freedom.